Welcome back to Financial Accounting at 6. In this video, we are going to look at the question paper of November 2023, particularly question 1. So, this is the question that we want to look at. This video, we are just going to indicate the appropriate answer. Then the first one is saying SAICA stands for. We know that SAICA is an abbreviation and it stands for South African Institute of Chartered Accountants. So we can indicate our B as the most appropriate that we have there. Then 1.2 IFRS stands for. We know that it represents International Financial Reporting Standards, which is B, most appropriate. Go to the next one, which is 1.3. It reads identify the correct net effect on the accounting equation. These transactions, this transaction is provided for bad debts must decrease by 400 in the line. And the line is what accounting equation that you are given is assets is supposed to bonus equity plus liabilities. So out of this transaction, we are going to identify which elements of the accounting equation are being affected and how. Is it going to be an increase or decrease in terms of elements, a plus or a negative, an increase representing a plus, and then a decrease representing a minus. So this is what we have. So let's just analyze the transactions that we have and try to identify what are they affecting in terms of the components of this accounting equation. Remember, when you've got a provision for bad debts having a decrease, remember this is income. When we are adjusting in the profit and loss account, we put it under income. So this is a decrease, which means it's going to increase the figure for net profit. When it increases the figure for net profit, it means also the figure for owner's equity it's also going to increase because when profit increases, it's also going to increase the owner's equity balance. So it means they're going to have an increase in terms of owner's equity. And then the other effect is on assets. Remember, when we are making a provision for bad debts, we are making it for the debtors. So what it means here is we are now going to subtract a smaller figure of provision for bad debts. Remember, the total provision for bad debt for that current year is supposed to be subtracted from the figure for debtors control to get the net balance that is going to put other current assets. So also we are going to have an increase to current assets as we are going to subtract a smaller balance of provision for bad debt for that year. So we have got a plus and a plus in terms of assets, a plus for assets and a plus for owner's equity. So this is what we have. So you see that the most appropriate that we have there is A. We've got A is the most appropriate answer there. Then we can go to the next question, which is 1.4, which reads goods were sold on credit for 7,310 after a trade discount of 15% was deducted. The original markup was 60% on costs. And then the question is saying calculate the cost of sales amount. So this we are given this that goods were sold on credit for 7,310 after a trade discount. So it means this figure that we are having 7,310 is after the trade discount of 15%. So if you say 8 of 8, so if you say 100, let's just say if you say 100 here, 100% minus 50% of trade discount, we are going to get 80. You're going to get 85%. So it means this 85% represents 85% is supposed to this figure 7,310. And the figure that we are looking for is the cost price. And remember, the cost price is always 100%. Cost price is always 100%. So it means the figure that we are looking for is 100%. So we can just make a proportion there. Remember, this is 7,310. So by making a proportion there, now we are saying we are just saying what we don't have. We make it as a numerator, and what we have a denominator, and then we multiply by the given figure, which is 310. And then over 1, we calculate there. So the figure that we are supposed to get there is 5,375. So this is our answer. So we can just indicate B as our appropriate answer there. Then 1.5 means goods were sold on credit for 7,310 after a trade discount of 15% was deducted. The original markup was 60% of cost. Calculate the trade discount. So in this case, we need the trade discount, and we know that the trade discount that we're given is 15%. And we are also given the total that goods were sold for. They were sold for 310 after a trade discount. So this is after a trade discount. So it means basically what it means is this figure that we are given here is 100% minus 15%, which is 85%. So this one is representing 85%. And the figure that we are looking for is 15%. So we can just also make a proportion as simple as that. So we come here, we are saying 85% is equal to 7,310. And then the figure that we are looking for is 15%. Then obviously we need a lesser figure there. So we can just make the calculation using the method of calculating proportion, whereby we're saying what we don't have is 15%, we make it a numerator. What we have is 85, make it a denominator, then you multiply by 7,310. So let's try to see what we get there. So if we say 15 divided by 85, then you multiply by 7,310, you're supposed to get 1,290. So 1,290 becomes our trade discount. So we have got A as our answer there. This is 1.5. So 1.5, we can indicate our A as the most appropriate. Then we can go to the next question. Up to 1.6, saying non-distributable reserves consist of. So first of all, let's try to understand what we mean by non-distributable reserves. So non-distributable reserves are basically they indicate profit available for the business that is not available to pay as dividends to shareholders. So we've got any profits that we cannot allocate it to the payment of dividend to shareholders. Remember, dividends, they are rewards that are given to shareholders as holders of the company. So if we cannot distribute those parts of profits to shareholders as dividends, because those are reserves, non-distributable. So according to the answer that we are given, you'll see that retained income is distributable, general reserve is distributable. So that makes also AHC out, and then we are left with capital redemption reserves. So this is the non-distributable. Remember, capital redemption reserve, it represents amounts that are transferred following the redemption or purchase of the company's own shares out of distributable profits. So this is what we, and also we can explain it from the point of view that they are proceeds of a fresh issue of shares. So they can also be created from fresh issue of shares. So we have got C as our most appropriate there. Then we got 1.7. Financial assets are. Then according to the responses that we are given there, we would see that B is the most appropriate one. A contractual rights to receive cash becomes the most appropriate according to the answer that we are given there. Then we go to 1.8. During the year ended 31 December 2021, a business made a profit of 31,000. A dividend of 8% was paid on the 200,000 order shares for 50 cents each, and 12,000 was transferred to general reserve. Then the retained earnings of the business at 31 December amounted to 68,000. What was the balance of retained earnings on January 2021? So basically, according to this question, we need to put the format that we put on the retained income notes. This to give us the answer. Remember, on the retained income notes, we say we start with the opening balance of retained income, balance at the beginning, and then we are supposed to add net profit for the year, and then we are supposed to subtract, if you have got any dividends, less dividends, if they are there. And then also, if you have got any transfers, we also less transfers. So this is what we have. Then according to the question, now we check those figures. We are seeing that we have got opening balance. We are given, that's the figure that we want to look at. What is the balance of trade on 1 January 2021? So this is the figure that we want to look at. So then we look at the net profit for the year. We are given it is 31,000, made a profit of 31,000. So 31,000 net profit for the year. Then we are given a transfer that was made of 12,000 to general reserve. So we're also going to subtract 12,000. Then we calculate the dividend now. But calculation of the dividends now, we are saying we are given it as 8%, which is 8 over 100. And then we multiply by 200,000 shares that are there over 1. And then we get the number of shares that needs to be allocated for dividends. And then the value of the shares is 50 cents. Then we multiply by 0.50 as our value per share. Then you get your answer that you are supposed to get there. Will give you the value for the dividend. So 0.08 we multiply by 200,000, and then we multiply by 0.5 as the value, get 8,000. So we have got 8,000 that we have there. So this is the value for dividend. So we can just go in there and input that. So we are just going to say plus 31,000 minus 12,000 minus 8,000. Uh, Minus 12,000 minus 8,000. There, minus 12,000 minus 8,000. So we are going to say here, this one we don't have it, but then here we are adding 31,000. Then this one is 8,000. And then this one is 12,000. Then we are also given the balance at the end. In the question, we have the balance at the end again. We can just say balance at the end. You can go and check what figure we have in terms of the balance at the end. We are told that let's try to see. We are told that the 10 earnings of the business on 31 December 2021 amounted to 68,000, which 21 December indicates the closing. So it was 68,000. So we are going to put it as 68,000 here. So we are saying 68,000. So this is the representation that we have in the trade income note. So the figure that we want is this one. So we can just make this one chart with the formula whereby we are saying our opening balance 1,000. We subtract 8,000. Then we subtract 12,000. Then we get your 68,000. So if you make opening balance the subject of the formula here, what are you going to say? You are now saying opening balance is equal to 68,000. We take all the figures the other side. 31,000 becomes negative, minus 31,000. This one becomes positive. This one becomes positive again. So we calculate that one. The answer that you are supposed to get there should be 50. You are supposed to get 57,000. Let's just verify 68,000. We add 31. Sorry, subtract 31 there. 1,000, and then you are supposed to add 8,000 and 12,000. We get 57,000. So the answer that we are getting there is 57,000. So this is the balance that we are looking for. So we can check on the answers that if we have got that figure. So if you come here, you will see that we have it on V. So V is our appropriate answer there. So we got V here. Then you go to 1.9. 1.9 reads, goods were sold on credit for 7,310 after a trade discount of 50% was deducted. The original backup was 60% on cost. Calculate the amount of the trade discount on the sale. So what are we saying? These goods were sold on credit for 7,310 after a trade discount was deducted. So this one is 85% again. 85% equal to 7,310. So the figure that we are looking for trade discount is what? It's 15%. I think we've calculated this whereby we said, I think this question is coming again in the same question paper. We said 85, sorry, 15 over 85, and we multiply by 7,310. And the answer that we got there was 1,290. So if you check there, see that we have it on A. So there we have got it on A. So we're saying A is what's appropriate. Then 1.10 indicates that cash and cash equivalents not consist of the following except. So you see that cash and cash equivalents, we have got the bank there. It's there on the calculation of as a component of the cash and cash equivalents. Not petty cash is also there, but cash float becomes a component of petty cash. So we cannot say we include cash float there because it's a component. So we cannot include it there. But bank overdraft is included because when you're calculating the opening balance and closing balance, we need to incorporate or integrate the figure that we have for bank overdraft to get the net balance that we have, be it at the beginning or at the end. So cash floats become the odd one that we have out there. So remember also cash floats is as we try to define cash floats, it is a small amount of cash kept on hand by a company to cover minor expenses and day-to-day operations. So you see that cash float is just a component. So the actual figure for cash float cannot determine the balance in terms of the opening balance and cost balance. So this is what we have. So we can just continue to see if you have got any other question that is going to follow. So maybe we also have got a question part of the question 2. So we can go there to see what we have in terms of that question. This question that we have and it reads, indicate whether the following sentences are true or false by writing true or false next with question number, that is 2.1, 2.5 in the answer book. Give a reason for the answer. Right, we are given 2.1 saying international financial reporting standards ensure consistent standard of preparation of company financial statements, which is very correct. Remember, they come as standards that are applied on the preparation of financial statements. So this 2.1 becomes a true, so we can get it as true. So this one is true. Then second one, customers are primary users that need financial statements of the company to invest with the company. Remember, customers are clients; they are not users of financial statements. So you know that users of financial statements, we've got financial institutions, we have got lenders. They are users of financial statements. Customers, they are not concerned about the financial statements. What they are concerned of is the product or service that is being offered to them. So this one, 2.2 becomes false. So you've got false there. Then 2.3, incorporation is the act of forming a registered company. Incorporation is the act of forming a registered company. So this is true. We can get it as true. Then we go 2.4. The statement of financial position is not one of the 5 elements of financial statement, which is false. Remember, statement of financial position is one of the elements of financial statements. Remember, the main financial statements that we have, we've got the statement of financial position, which is the balance sheet. We have also the income statement, which is also the statement of statement of comprehensive income. And then also have the statement of cash flow statement. So those three, which means this one is not true. So we can indicate it as false here. Then we've got 2.5, the equity of closed corporations does not consist of reserves and is not divided into retained income distributions and reserves. Now we can just maybe repeat it. The equity of closed corporations does not consist of reserves and is not divided into. This is false. Remember, these components are the components of equity of closed corporations. That is revaluation, distributions, and retained income. So this one comes as false. So we are saying false. So this is what we have, guys, in terms of this video. Those who have subscribe and share. We are still coming with more videos as we prepare for exams. As for this video, I'm signing out.